Guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the absolute fastest way to grow a small account with swing trading. So I hope you guys all enjoy it. If you guys have any questions, by all means, ask them down in the comments. And if you guys are new to the channel and you're like, who is this guy? My name is Carter and I'm a full-time swing trader in the stock market. I've been doing this 6 years full-time. And with that being said, we do have an amazing course where we talk about how to find these stocks and opportunity. There's live streams, there's quizzes, lectures, there's a group chat where we talk about stocks and everything you must know about swing trading. So guys, check it out down below. You guys can use code YouTube to get 20% off. It's absolutely fantastic. Put it down below and I'll see you in there. But guys, let's dive into this. Let's go. All right, so before we talk about my strategy and before you guys fast forward to the end of this video where we break it down, you guys need to know a couple of things beforehand. The first thing is a lot of people have this mindset with trading and swing trading that it's an easy way to get rich quick. And if you're already thinking that, I'm sorry to say, but you're already in the wrong headspace. If you're a brand new trader to the stock market, the first thing I would recommend doing is to paper trade and to learn as much as you can. You need to invest in that education. You need to practice, and paper trading is a great way to practice. And the reason why is because it's simulated money, so you can practice your entries, your exits, your risk management. And I already know, I can already hear the comments saying, Carter, but using paper trading doesn't deal with emotion. Yes, you are right, but starting out, you just need to understand the basics of your strategy because everybody has a different personality, everybody has a different strategy, so you need to practice that beforehand. Now, yes, after you paper trade for at least 6 months to a year, then what I would recommend start doing, then you should do a 1 share challenge. What this is instead of swing trading with thousands of dollars right off the get-go, swing trade with 1 share. Buy 1 share of a stock and see how you do. This will slowly start introducing the emotions behind trading. Because in my opinion, emotions make up about 80% of trading. So you need to be clear, focused, so you can understand the task ahead. Once you do that and you're profitable, then I would start slowly increasing the amount of money you're putting into your account. And the reason I wanted to say this is because a lot of people just think that trading is easy. It's an easy way to get rich quick. And there's a lot of false beliefs behind trading. A lot of people think that once you have a strategy, that's your strategy for life. No, your strategy will slowly change, just like the stock market changes. Your strategy is a guide so you can understand the types of stocks you trade, your entries, your exits, and your risk management skills. So guys, now that we understand that, let's actually turn to the computer and I'll show you guys some of my trades. All right, so when growing a small account, at least for me, I love to find stocks that are on some sort of upward trend that have sold off down to some levels of support. Now, support could be a variety of things. This is what a lot of people get confused on. Some people think it's price support. Some people think it could be indicators, RSI lines. It could be every single one of those. Now, support, in my opinion, is the bread and butter of trading, at least for me, where I'm a long investor, a long trader. So I buy a stock and sell it at a higher price compared to shorting a stock where I short a stock and then you pretty much buy it back at a lower price. Now, shorting, in my opinion, is a lot more, it's a lot riskier. And the reason why I say that is because if that just say you buy a stock at $1, the worst that can happen is it goes to zero, right? Now, when you short a stock at $1, imagine it goes to $10 or $20 or $30. Now, you lost so much money. And in my opinion, it's just a lot harder to do and it's just a lot more risky and I just don't see the benefit of it. So at least for me, like I said, I love finding stocks on some sort of upward trend. Now, this was one of our more recent swing trades here, ticker symbol STLA. It has this beautiful upward trend. Now, as you look at it, it may seem a little overwhelming or, whatever you think, but just look at this blue line. This blue line is what we call a moving average line. So pretty much what happens is what we see is when the stock is above it, is it using it as support, right? So it comes in contact with it several times, right? As we look at it, you guys will see it hits it once, almost twice, 3 times, and then recently 4 times. So this past month, we took a trade right on that 90-day moving average line, setting our stop loss just below it. So we risked $1 to make $3, which is an absolute pretty solid risk and reward ratio. So this was an absolute great trade here. Another stock that we traded was ticker symbol IBRX. IBRX used something called the 200-day moving average line. So this is the red line. You guys will see it comes in contact with it in the past. We established some support there, and then recently it came in contact, hit it. We bought near and around $3.30, setting stop loss just below $3. So we risked 30 cents to make over $1 a share, which is an absolute pretty solid risk and reward. Now you may be saying, Carter, what happens when a stock sells off? And this happens just because, a lot of new traders think that once you have a strategy, that this is your strategy, for life, and it's going to work 100% of the time. No. Having good risk management skills and good risk management is very, very important with trading. We took a trade on DVAX here this past week. Everything looked good. It had support on that 200-day moving average line. We hopped in near and around 1336, setting our stop below, 1315. So we pretty much risked 15 cents to see this thing squeeze up to over $14. So we risked 15 cents to make over $1 a share. Now, obviously, that didn't happen and it started getting sell-off. We ended up selling out near and around 315, like I said, but it continued to sell off. This is why having good risk management and understanding stop losses is super important. And the reason why is because if I was still holding this stock, my loss on this stock would have quadrupled as of right now. So having good risk management and understanding your strategy is a very, very important thing with swing trading. Now, one last thing before I leave here. This is a stock that we were trading here, ticker symbol BBIO. This is a play that we're actually in on right now, so we'll see what happens with it. But heavy support on that 90-day moving average line, comes in contact, with $33. Hopped in at 33, setting stop loss below 32, risking $1 to see if we can make over $7 a share. Absolute fantastic risk and reward, and I'm very excited to see where this play goes. Now, this is the upward trend you guys will see down to some sort of support line. Now, if you guys want to learn how I find these stocks, make sure you guys check out my course. We have scanners and all that stuff that you guys can use with TD Ameritrade, with Moomoo, all the popular brokers. So check it out, and I'll see you in there.